Good morning, traders. Welcome to Wednesday's morning update from Phoenix Blue. We'll be having a look at all the usual Asian markets, news, etc. in a moment. Quick focus on the London Forex show and a reminder now of our contacts. Instagram, regular daily updates or updates through the day at Phoenix Blue Trading. Email any questions whatsoever about Phoenix Blue or specifics of the things we talk about in the videos, info@phoenixblue.co.uk, on Facebook Phoenix Blue Trading, and very shortly the Phoenix Blue website. Okay, London Forex show. We'll be there. Phoenix Blue will be there on Friday, this coming Friday, the Novotel London West. Doors open at 9:30. You can get more detailed information about who else is there and the location from londoninvestorshow.co.uk. It is actually Phoenix Blue traders who will be there, no salespeople. Come down, have a chat to us, just say hello, tell us you're subscribing to the channel or whatever, and it'll be great to see anybody. Okay, over to the news. Starting off with yesterday. Yesterday we had the CPI on the pound. The actual numbers came in exactly on the forecast, only for the pound to drop 240 pips. So the pound doing its usual unpredictable things unless you specialise in trading that specific market. Slightly positive figures on the German economic sentiment. Also positive on Canadian manufacturing sales, and a better number on the New Zealand dairy price index. What we've got to look forward to today on the pound, again, we've got the claimant count and average earnings index at 9:30 this morning. This afternoon from the States, building permits and PPI. 7 o'clock tonight from the US, FOMC meeting minutes. Any trading around here, be really cautious or don't trade at all. We're not expecting much from this because Janet Yellen was in front of the legislators through the week, so we believe that we've heard what we've heard what's going to be in those minutes already. And then later on this evening we've got PPI from New Zealand, and overnight employment and unemployment figures from the Aussie. Okay, right, over to the Asian markets. We talked about this US dollar yuan exchange rate yesterday. We also talked about it last night on the Trading Tuesday update, which is on the channel, with a bit more detailed information. What have we seen overnight tonight? Well, the pullback continuing. Clearly, the Bank of China made a big statement, and now they're allowing price to drift back, or the yuan to weaken slightly. Over to the Shanghai Composite. Again, yesterday we talked about this would price break above this level here, which represents the 2015 lows. The answer is it appears to have tested it and rejected it in the short term. Again, we'll be watching to see what's happened there. So not a great deal coming out of that yet. Here we have the Nikkei. We have a level in here that's been respected. We've got a 3-bar reversal. So again, really reflecting what was happening with the yuan, and that also links into what happened with crude last night. Yesterday. Here is crude. We had a rejection from this trend line yesterday through the news event, which was related to crude oil production agreement between a number of major OPEC and non-OPEC oil producing countries. We saw a spike up on what was initially perceived to maybe positive information that turned into negative. So again, we've got a reversal there in that respect. That is reflected through on the US JPY. We had a trade in here which we were expecting to be driven through Bank of Japan intervention. That was bolstered by the Bank of China's intervention and gave us a return to the risk-off scenario. We now have a 3-bar reversal pattern here, so potentially returning to the risk-off scenario in the never-ending yo-yo that we've been experiencing the last couple of weeks. Phoenix Blue traders who are in this trade at the moment, and any of the JPY cross pairs, want to be thinking about your stops at this point in time. We'll have taken profits at our first target. Stops will be at break even, but there might be something to be gained by reviewing your stocks. Reviewing your stops at that point. Having talked about the crosses, here's exactly the same on the CAD JPY. Again, not quite a 3-bar reversal, but a very similar pattern. That's what we expect. We know that the Canadian dollar tracks crude oil. The CAD JPY cross also tracks crude oil. The reason being is that we've got the CAD, which tracks oil, as we know, crossed with the JPY. The Japanese are 100% importers of their oil, so they're on the other side to CAD in that respect. So you will always see that as a reflection, and you can trade it again as a proxy for crude. Okay, the other cross pair that you may still be in from this high here, or sorry, further down it would have been here when we were talking about the intervention from the Bank of Japan. This one's still going in our favour because of a weakening pound. We discussed that earlier, mentioned it briefly on the news, where we saw a weakening of the pound, even though the CPI figures came through bang on expectation. Okay, updates on some other trades that we're in at the moment, or another trade at the moment. Gold, we've an entry in at this level here. We're waiting for price to come to our entry there. Yesterday we had a we ended up having somewhat of a doji day, and again so far today we are waiting for as I say, for this entry, so we'll just wait and see what happens with that one. Nothing to report on the commodities trades over and above what was said last night on the Trading Tuesday video. Okay, so markets are quiet at the moment. From a trading perspective, they're not quiet in respect of a movement perspective, but opportunities for us to trade are limited at the moment. If you are trading, trade with caution, reduce risk, and be aware of how much total risk you've got in the marketplace at any one time. Okay, short and sharp today. Hope you enjoyed that, and I look forward to speaking to you again in the morning, and hopefully anybody who has the time to pop down to the London Forex show on Friday. Okay, thank you very much for listening, and goodbye.